This is something that we talked about for many months now. And it doesn't seem as if most of the people trading or holding AMC, because there is a difference. I think there are people that are just trading AMC because it's a volatile stock. And, to that extent, it makes sense somehow. But, the way the algos at Citadel, for example, or at other market makers work, it's based on identifying or kind of setting what I would call traps, bear traps, bull traps, and this it's through the option chain. And we have a portfolio manager, here in Houston, Texas, actually calling out on exactly what is the practice that some of these market makers are using in order to continue to stay in business. Because and this is why I believe once pretty much everybody, whether you're just trading AMC, swing trading it, or holding it for the squeeze, it doesn't matter, because once everyone doing this with AMC will stop, I believe we can actually see a major reversal. So the ball is really in our court, but I don't understand why people are not really paying attention. Look, he's saying that here is what really happened on yesterday. This is Friday, all right? Ken needs, and Ken is talking about Griffin from Citadel. He needs the liquidity. Why does he need liquidity? Well, because the market is tanking. The market has been tanking since the beginning of this year, and the market is, money is going to be a lot more expensive moving forward. So they kind of caught up in, their own games, and now they need money. They need money to sustain the operations. Otherwise, clients are going to take the money and get out. Now, much of that liquidity is now coming from options chain as well as from the trades themselves. How does it get that money? His machine learning algorithm detect that there is not enough money being made this week. So there really is a stranglehold he has on certain stocks, allowing them to rise on the short term, and the algorithm starts buying the stock for a short term to pump them up. During this time, some rich shares change hands, and a lot of fools, yeah, it's right to call them fools, running buy call options like we've never been here before. When enough money is made, the algorithm then crash the same stocks and make more money on the way down. The calls naturally expired outside of the money, and everything is happening on the watch of course, the SEC, and they're doing nothing. The bottom line is, if you're still buying calls, if you're still buying options on AMC, you are keeping the market makers and these hedge funds in business. And it does make sense, folks. It does make sense. Totally makes sense. Why? Because we've been here many times before. They will try to run it up, and then kind of play with our emotions, and they know that once it starts running, we know how far and how high it can go. So they're setting up a trap for people to fall, and then when people fall in those, they start making, quick money, but they don't realize that you need to get out as quick as you are already profitable. Because think about it. AMC was up 30% on, Thursday. All right. Thursday or Friday. Yeah. Was it Friday? 30% right off the bat. And then boom, went back down. Boom, went back down. So if you had calls at a certain price with a strike, and then $2, $2 gain on the price of the share, then you're making a lot of money on the auction. Why are you still sitting there? Because you're expecting these to go to 50, 60, 70, 75, 100%. But you have to look at the volume, because the volume on these 2 days where MC popped just for 1 hour and came back down was not as huge as the volume we had when people were actually either covering or FOMOing into the stock. So bottom line is, yeah, if we want to see like the numbers that will make us sick, like crazy rich, at some point we have to decide, what do we really want? Do you want to continue to give ammos to these guys to continue to short us, or do we want to get rich? It's no brainer for me, man.